Alright, what's up, YouTube family? Thought I'd talk to you guys about just the misconceptions and the misleadings of the penny stock and stock market. Not everybody gets rich, and not everybody loses a lot of money to begin with. So when you jump into the penny stock market, there has to be some level of experience in order for you to understand where these stocks are going, or which stock is going to move the most, or which stock is bringing volume. So as you see right here, Hertz. This was last year. I wasn't able to get in on this play, but as you see, I was able to screenshot it and pretty much show everybody what happened here. I think they took an earnings miss, and the stock pretty much dipped around 17ish and bounced back up to the highs of 25, 20, 24, whatever it was. And as you see right here, Southwestern Energy, you see the bottom, the support level right here. All of this comes with experience of knowing the charts, knowing how to set your support, knowing how to set your resistance, knowing how to set your trend line, just being aware of how to use your tools in the market helps you go a long way. But if you do not have the experience of using tools, it's kind of a setback, and you'll have to get that experience. And right here, Apple was trading in a small range, and it just completely broke out. So it broke out during the Apple event. I think it was the release of the iPhone 6. I think it was the iPhone 7 or iPhone 6. Either one. I remember because Tim Cook was opening up the door, and Apple just took completely off. So what I'm saying here is you need experience before you can be that trader that just makes all these outstanding trades that are making $300 a day, or $1,200 a day. There has to be some level of experience for you to understand where stocks are going. You're not just gonna open up your brokerage account and just start buying stocks blindly and hoping that you get some kind of good return, or you're buying penny stocks and hoping that it'll go up over time. It's a penny stock for a reason. That's why the stock trades so low. You're buying a penny stock that was worth at one point $2,500 or $25,000 a share, and now the stock trades at 30 cents, and you're thinking you're getting a discount, but little do you know, the company probably went bankrupt the whole time. It went from 2,500 all the way to 30 cents, and now it's on the corner of getting the listing on the OTC, or maybe even the stock market altogether. This might be a company that's just going completely bankrupt, and it might just remove itself off of all the exchanges at the same time. So we want to be very careful when we place that buy order, or if we haven't did any research and we expect to buy a stock. That is a red flag, and you must do more research on a company before you buy it. If you're going to trade it, make sure that you're understanding the ins and outs of the trade. You're understanding the support level. You're understanding the resistance. You're plotting your trend line. You're plotting your exit point. You're plotting your entry point. You're plotting everything. You have to be eyeing this thing all the way up and all the way down. Remember, this is your money. Nobody can tell you how to use your money, but we want to show you the right way to get a good return on your money. So when you see these support and trend lines and resistance, as you see me use double top, triple top, this comes with experience of reading, researching, and trying to understand the way the stocks are moving and the way the stock market moves as a whole. Alright, so here's a perfect example of a penny stock that should be traded, not invested in. So I would say I bought it at 7 cents, sold it around 9 cents, took my gains, got out. Now, the following days after, on the open, this stock went from 7 cents to 22 cents. So I really missed out on about 300% gain right here. So when we look at these stocks right here, you want to say, oh yeah, man, it would have been a good investment if you just held it just a little bit longer and this and that. But if you didn't do your research, you would know that this company was getting delisted, which means that the stock is removing itself from the stock exchange from not meeting requirements to stay on the stock exchange. And I don't know if they're going to they were going to move to the OTC floor, or if they're just going to get delisted off of the stock exchange as well and just get out of the stock market as a whole. So we want to make sure that we're doing our research, because as you see, the 7 cents all the way to 22 cents. But if you didn't have the backstory and understand where this stock was going, you would have probably lost a lot of money here. Of course, you'd have made 300%. As you see, the stock started to come right back down. And who knows, maybe after that huge gain, the stock got completely delisted and they removed it soon as they seen this gain happen. That's happened before, and you don't want to be put in a situation to where you're losing money and you think you're gaining it at the same time. So we want to make sure that we're doing our research, and we want to make sure that we're getting experience. Simulated trading will give you the best experience without using your own capital. But if if you're feeling like you're ready after trading with the simulated trader, you go ahead, get into the stock market. But I would suggest be cautious. Maybe start investing first. So invest in credible companies. Remember, we must do research before we trade or invest. That's what we want to do. That's our primary goal before we even think about trading the stock. We want to research and understand why the stock is down. Why the stock is down, and then after that, we want to start plotting our risk exposure and our gain exposure. That's what we want to start plotting out. And after it meets our requirements, go ahead, check it off, and go ahead, press that buy button, and we can make some gains. But if you want to start buying stocks, make sure you're doing your research, and once you start doing your research, it'll give you more experience. And then after you're doing your research, you want to get more familiar with the charts. You want to start understanding triple top, head, and shoulders things like that. You want to make sure that you're looking at strategies, all kinds of indicators. There's a lot of things going on with the market, and you want to make sure that you're understanding every single thing that's involved with the market. You want to make sure that you understand all indicators that help you make money, and you don't want to get any useless indicators that you don't understand. You want to make sure you keep it pure and simple. Right here I have volume, and I have the RSI, to tell me when to buy, when to sell. And over time, I've incorporated a couple more that give me a more accurate reading along with the RSI. So we want to make sure we're getting a feel with the market. We want to make sure we're getting that experience in, and we want to make sure we're doing our research on the charts. So with that being said, make sure you guys go out and research for yourselves. And once you do the research, once you start understanding the charts more better, you'll be well on your way to making more successful trades and making more money. Take care.